Hello, Luke Jones here, your local real estate expert and your real estate economist. And so today, what I wanted to do is really kind of go through what's happening in the property market and share some really interesting stats with you. So these stats are kindly provided to us here at Keller Williams by our friends at Dataloft. And so let's go over some of these key market summary information. So last year, there was very resilient pricing overall, and there were some small price falls, but actually activity really did take a bigger hit. You probably all noticed that in the market. Things kind of felt like they slowed down a lot. However, inflation has now peaked, and it's now back to kind of what we call more normal levels or lower levels. Interest rates are expected to fall again this year, maybe as soon as the next budget, which is going to be June 24th. But the fact of the matter is that most of the loan brokers out there have baked in these lower interest rates already. So it's not going to make that much of a change. But the thing that we've all got to get used to is the fact that overall the interest rates are just that much higher. And so that is impacting buyer confidence. It's impacting the cost of home ownership. So we're not going to go back to the prior lows. But what we are expecting long term is maybe interest rates around that 3%. And so overall in 2024, we've seen, some price growth, but it's pretty low. It's sort of single digit price growth. And so overall, the bigger picture, macro picture, is that there's still a lot of volatility in the market. Housing affordability hasn't really had a complete reset. It's still very expensive to own homes. And there has been a slow and steady recovery, but nothing really to write home about. There's a lot of global instability. As we know, there's all sorts of stuff going on. And finally, it is an election year, of course, both here and in the States. So lots of stuff going on. Now, what we can do is we can do a bit of a deeper dive now. And why don't we look at what's happening, moreover, in the kind of recent price trends and where things are heading. So let's look at that for a second. What we're seeing is that overall, we're seeing a bit more stabilization happening in the market. There was a really bad patch at the end of 2022 and the beginning of 2023. We all remember the Truss budget, which caused a real ruckus, and it caused this massive spike in inflation, and the market really took a dip. Then that happened again, continued to happen over the course of early 2023. Things started to settle. Where we've seen the biggest kind of corrections happening is in the more expensive Southeast markets. They're kind of the bellwether for what's happening in the broader property economy. So we want to watch what happens in London, because oftentimes when things happen in London, it's a little ahead of what happens for other areas in the country. And so that's kind of where we're headed with the recent price trends. And so what we know is that if we watch what's happening in the London market, that tends to impact what happens in the secondary and more tertiary markets. And so then if we do another look at some more interesting stats, let's go into what's happening with the economy and what's happening in the broader outlook. So what we can see here is that the strength of the relationship between the economy and the housing market is pretty much in line, right? So that the housing market tends to be a bit of a bellwether, again, with what's happening in the broader economy. So overall, there's economic growth is predicted to improve modestly, and this is going to help drive house price growth as well. There is talk. Some colleagues, some friends of mine recently had conversations with the guys over at BlackRock, which is obviously one of the biggest influencers in the world of the economy, and they were predicting that the very bottom of the market was going to be coming around very soon, and then things are going to start to pick up. So they're in heavy acquisition mode, which is interesting actually. So they're predicting that prices will start to really rise significantly after June, which is in line with what's happening in the government, where they might actually start to bring down interest rates again on June 24th as well. So we all want to watch that. The risks are that there is going to be continued weak growth. It's not going to be very exciting. It's not going to be, we're not going to see a huge amount of growth. It might be single digit. And so we want to sort of manage our expectations when it comes to the growth market overall. And so then let's have a look now at some other interesting stats. Let's have a look at what's happening with mortgage rate approvals. That's often a really good indication of where the market's headed, is how much pickup is there in terms of mortgages being approved, mortgages being offered. So we have seen a mortgage approval increase, but that's yet to filter through to the actual transaction activity, because of course, as we know, it takes quite a few months, right? For you get a mortgage approved, you get under offer, you get your home sold subject to contract, but then it takes a while for it to get through to conveyancing. So the reality is that even though the mortgage approval rates have gone up slightly, we're not really seeing that bear fruit in the overall transactions. What we also know is that this is a seasonal industry, right? So people tend to move more with more frequency in the summer and the spring and the summer, and so we're sort of waiting really for some of this data to come out, from the seasonal changes that we have. We are seeing as well a lot more kind of cash buyers coming back into the market. I think they're sensing that the bottom of the market is starting to really be around the corner, and so they're kind of jumping on things now before they expect prices to rise. And then why don't we go ahead and quickly, in this summary of the market overall, let's have a look at what's happening with the rental market, because I think the rental market is a really, really important thing to understand. So what we know with the rental market, as we all know, is that the rental prices have been off the charts. It's been really expensive to rent property. But what we do know is that actually things are softening a little bit. The rate of growth in the rental market is slowing. Doesn't mean that rents are coming down per se, but what it means is that the rate at which they're increasing is slowing. And that's happening again in markets like in the Southeast, in London, the rental market is slowing overall. But the general consensus around the rental market is that there is going to be a continued growth into 2024, and that it'll slow a little bit, but it's still going to be very, very low supply, low inventory. We need more housing stock. This is driving up the cost of rentals. And so again, we don't expect to see a big change there, but again, seasonality is always a really important thing to bear in mind with the rental market as well. Like if you're in a university town, the season really picks up, towards the end of the summer and September when university starts again. People like to move in the spring and the summer. So again, we want to keep a look at that. But the rental market continues to be incredibly strong. And so if you're out there needing to find a rental property right now, definitely get with a really good local area real estate agent who can help you find a good deal. And if you're contemplating becoming a buyer, really think about that, because remember, it'd be so much better for you to pay your own mortgage instead of somebody else's, right? And mortgage interest rates are coming down. So if you are feeling like you're at any risk of rental prices going up, if your landlord's looking to raise the rent on you at all, consult with a local area estate agent about whether now is maybe the time to purchase a home, because it's always in the long run a better idea to own your own home and pay your own mortgage than somebody else's. So that's a bit of a summary. We've looked at the macro picture, we've looked at the housing trends, we've looked at the broader real estate economy, we've looked at the rental market. And so now really the key is to go out there and just be very educated about what's happening in your local property market. So if you want to have that local deep dive, feel free to reach out. I'm locally based in my area. I can help you understand the local economy. Or if you're not in the local economy where I am, reach out to me anyway, and I can refer you to a local agent where you are. And then just make sure that you understand what's happening with your local property market, because the more you're educated about what's happening, the better decisions you'll be able to make. So I hope that's been useful for you. Have a great weekend. It's Friday, so hope you enjoy your weekend, whatever you're doing. And if you ever need anything, feel free to reach out to me. It's Luke Jones, and you can find me on my mobile anytime, 07587 474 035, or email me at luke@lukejonesre.com or luke.jones@kwuk.com, and I'd love to be of service. Have a great weekend. Bye-bye.